Hello and welcome to The Explainer. Today, we are diving into something really cool. We're going to unlock a powerful signal that's hidden right in plain sight, deep inside the stock market. It's a way to see what the market as a whole is thinking, a way to read its mind, really. And it all starts with one simple question. I mean, haven't we all? Every investor, whether you're just starting out or you've been at it for years, you face the exact same problem. What's going to happen next? It seriously feels like you need a crystal ball just to figure it all out. But what if I told you there's something that isn't quite magic, but it might just be the next best thing? It's a tool built right into the fabric of the market that gives us a shockingly clear picture of what might be coming down the pike. And that tool is the options market. So let's get into it. What exactly is this market's crystal ball? Well, to really get it, we've got to start with the one simple tool that makes this whole thing possible. Okay, let's make this real for a second. Forget all the abstract stuff. Just picture a company you know, like Tesla. And let's say you want to get a handle on where its stock might be 3 months from now. Instead of just throwing a dart at a board, we can actually look at what the entire market is betting on. And to do that, you got to understand this one key thing, a stock option. So what is it? It's just a contract. That's it. It gives whoever owns it the right, and this is the important part, it's not an obligation, to buy or sell a stock at a price you both agree on today. We call that the strike price. And that right only lasts until a certain date. This simple little contract is the foundational building block for, well, everything we're about to uncover. All right, now here's where we make a little mental shift. Because to unlock this, you have to stop seeing option prices as just numbers on a screen. You have to see them for what they really are. The collective bets of everyone in the market. You see, buried inside every single options price is a hidden piece of information. That price tag? It's not just the cost of the contract. It's what we call the market's implied probability. In other words, the odds the market thinks that a certain stock price will actually happen. They're really just two sides of the very same coin. And hey, this isn't just a clever way of looking at it. This is a fundamental financial truth. As finance expert Stephen Blythe puts it, option prices are just probability distributions. The whole system of prices for a stock can be translated almost directly into a map of probabilities. We're literally decoding the market's expectations. So you're probably thinking, okay, how in the world does that happen? How do we get from a boring old list of prices to a full-blown probability map? Well, the process is actually surprisingly cool, and you definitely don't need to be a math genius to get the big idea. The method is actually really clever. Think of it kind of like building with Legos. You start with standard pieces, in this case, basic call options. Then you combine them in a very specific way to build something special, what's called a call butterfly. Now, this little creation does one thing perfectly. It isolates the market's bet on the stock landing in a super narrow price range, like say the chances of Tesla hitting exactly $200. And the price of that butterfly, well, that directly tells you the probability the market has assigned to that one single outcome. And this is where the magic really happens, because you can do this for every single possible price point. And when you stack all those tiny individual probabilities together, slice by slice, you suddenly have it. A complete, detailed map of the market's collective expectations for the future. Okay, so that's the beautiful, clean theory. But what happens when we take this idea and apply it to the messy, real world? Well, the picture we get back, it isn't quite the perfect curve you might see in a textbook. It has a very distinct and very revealing shape. The classic financial models, the famous ones like Black-Scholes, they all kind of assume that stock returns follow this perfect, tidy bell curve, where extreme events, huge crashes or massive rallies, are supposed to be incredibly rare. But the real market knows better. It has what we call fat tails. And all that means is that traders know that wild, huge, unexpected price jumps or drops, they happen a lot more often than those simple models want to believe. And when you actually plot the probabilities you get from real market option prices, you see this fact in living color. It's called the volatility smile. It's not a perfect curve at all. It's a reflection of how people actually feel and trade. A reflection of real-world fear and greed. So what is this smile really telling us? First off, it's screaming that the market is not a perfect bell curve. Second, it shows that traders are actively willing to pay more money for options that act like insurance against big, crazy price swings. It is quite literally a graph of the market's collective fear and greed. Okay, so let's bring this all home. Now that we know how to decode these signals, what does it actually mean for you as an investor? I mean, how can you use this to make smarter decisions? Well, think of this as a whole new section of your investor toolkit. Instead of just guessing, you can now actually gauge the market's collective forecast. You can literally see where traders are pricing in the most fear or the most excitement about a stock. It lets you go way beyond just looking at the current price and see a much, much deeper layer of what the market is actually thinking. And that right there is the real takeaway. This is not about finding some magic bullet that's going to predict the future with 100% certainty. Let's be real, nothing can do that. It's about shifting your whole perspective, from trying to guess what will happen to clearly understanding the odds of everything that could happen, according to the wisdom of the entire market. It really makes you wonder, doesn't it? If this incredibly rich, detailed map of probabilities is just sitting there, encoded in option prices for anyone with the key to read, what other powerful signals are hiding right there, under our noses, just waiting to be decoded?